Everyone's been waiting for it, the Bitcoin explosion. The halving, the ETFs, the hype, all the signs say it should be higher. Yet here we are, stuck in limbo. So, what's holding Bitcoin back? In this exposé, I'll uncover the truth behind the calm, the silent forces, the market manipulations, and the macro storm still brewing beneath the surface. Stay with me, because once you understand what's happening, you'll never look at Bitcoin the same way again. 1. The expectation trap. Every few years we see the same pattern. The halving, the optimism, and the belief that this time is different. But here's the uncomfortable truth. The market doesn't explode when we expect it to. Bitcoin thrives on surprise, not on schedule. And right now it's being suppressed, not by code, not by adoption, but by human psychology. When everyone expects a breakout, the whales, the smart money, step back. They accumulate quietly. They let the impatient retail crowd lose interest. And only when the crowd gives up does the real rally begin. 2. The liquidity squeeze. The second reason Bitcoin isn't exploding is something very few YouTubers talk about: global liquidity. Central banks around the world have been tightening. The Federal Reserve, the European Central Bank, the Bank of England, all pulling money out of the system. When liquidity dries up, risk assets suffer. Stocks slow down, tech deflates, and crypto, being the riskiest of all, gets hit hardest. But here's the paradox: this liquidity drought won't last forever. History tells us that every tightening cycle ends the same way: in panic, in crisis, or in reversal. When that reversal comes, and liquidity floods back in, Bitcoin will be the first lifeboat the smart money jumps into. 3. The institutional chess game. Behind the scenes, the biggest financial players on the planet are quietly positioning. BlackRock, Fidelity, Citadel, names that once mocked Bitcoin, are now building ETF products, custody services, and trading desks. But don't be fooled. They're not doing this for you. They're doing it for them. These institutions don't buy at the top. They engineer the bottom. They create fear, they amplify uncertainty, and while the public hesitates, they accumulate. Every piece of negative news you hear, every regulation, every investigation, every crypto winter headline is part of that chess game. They're moving their pieces. We're watching the board. 4. The government's tightrope. There's another layer to this story, and it's political. Governments worldwide are experimenting with central bank digital currencies, or CBDCs. Now think about it. Why would they want Bitcoin to explode while they're trying to launch their own digital money? They want control, traceability, taxation, and data. Bitcoin offers the opposite: freedom, anonymity, decentralization. So yes, regulation is coming. But the more governments try to suppress Bitcoin, the more they accidentally validate it. Every law, every crackdown, every banking restriction, it only reminds the world why Bitcoin exists in the first place. 5. The halving mirage. Now let's talk about the halving, the sacred event of crypto believers. Every 4 years, the number of new Bitcoins created is cut in half. Supply drops, scarcity increases, and in theory, the price should skyrocket. But not instantly. Historically, Bitcoin takes months, sometimes up to a year, to respond. The price doesn't explode before the halving. It explodes after, when miners adjust, supply tightens, and new demand floods in. We're still in that adjustment phase. The fuse has been lit, but the explosion hasn't reached the surface yet. 6. The media silence. Remember 2021? Every major network had Bitcoin on the headlines. CNN, Bloomberg, CNBC. It was nonstop. But now, silence. And that's exactly what smart investors love. The media moves in cycles. They ignore, then they mock, then they praise, then they hype. We're in the ignore phase again. The best time to buy isn't when Bitcoin's on the cover of Time magazine. It's when no one's talking about it. 7. The energy and mining paradox. Another big myth is that mining is an environmental disaster, but the data tells a different story. Bitcoin mining is now over 60% powered by renewable or wasted energy. While critics attack it as dirty, miners are quietly turning flare gas, hydro surplus, and stranded wind energy into digital gold. This isn't destruction, it's innovation. And over time, that narrative will flip. Governments and corporations will realize that Bitcoin isn't the enemy of green energy. It's the engine driving it forward. 8. The patience of the titans. If you zoom out, really zoom out, you'll see the pattern. Bitcoin doesn't die. It consolidates. It resets. It tests your patience, then it rewards it. The 2013 crash, the 2018 bear market, the 2022 collapse. Each time the story was the same. It's over. And each time Bitcoin came back stronger, bigger, and more widely adopted. The question isn't why it's not exploding now. The question is, are you prepared for when it finally does? 9. The coming catalyst. Somewhere ahead, maybe in 2025, maybe sooner, a catalyst will ignite the next wave. It could be a banking crisis, a stock market crash, a currency devaluation, or a major ETF inflow. But when it happens, Bitcoin will move fast. And those who hesitated will once again say, I should have bought when it was quiet. 10. The calm before the storm. Here's the truth. Bitcoin isn't exploding yet because the world isn't ready for what comes next. We're in the accumulation phase, the silence before the thunder. But when this calm breaks, the moves will be violent, the charts will be vertical, and the headlines will scream what the believers already knew. Bitcoin isn't dead. It's resting, waiting, loading the next chapter in the greatest monetary revolution in history. So, stay patient, stay educated, stay prepared, because the next time Bitcoin explodes, it won't be by accident. It'll be by design. This is Felix. See you next time.